Welcome one, welcome all to the node. I am Mike, aka Veteran Crypto, also known as Racist. Yeah, we've been having a great time going back and forth with the keytards in our Discord and on X. And to be honest, it's just been comedy. We're basically we did a deep dive on Kita and the Kita token. And in a nutshell, very bullish on what the Kita network is building. We pointed out some issues with the Kita token. They took personal offense and have since spent the past couple of days going after us, trying to smear us and trying to make us out to be terrible people to try to basically discredit the deep dive that we did. So if you want to check that out, go ahead and check that out on X, or if you want to get in our Discord, you can kind of see the back and forth there. But with that being said, let's go ahead and here we go. Here's David.
Mike, can you tell me where on the doll did the bad man say the hurty words?
Well, it's right about where they're holding their Kita tokens.
Did he touch you in your ear holes? He got you with those mean words. Oh my goodness, man! Dude. Speech is not violence. That is crazy to me.
No.
That's so crazy to me.
The thing is that most of what we were saying was in jest to
I
get
know.
a rise.
Well, dude, having such a good time.
When I got banned in our Discord for a day, they reported me. I said something about basically about Jews loving money and like hating Jews loving money.
I don't even know what I got reported for. It didn't tell me. It just said I got reported twice, and I don't know what for. I mean, obviously there was plenty to report, but
dude, like what I said was directed at you in jest, in fun.
But you know what? You know what's fucked up about all that, though, Mike? So those guys, those keytards that were in the chat, when they got frustrated, like the first of them, when they first came in, that dude Yasser, and there were a couple of others, the first thing that they did was they were like, "What's your name? What's your last name? Where do you live?"
Oh yeah,
and then they said, "I'm going to dox you." But like, here's the thing, man. I dox myself. Like,
I know.
The fuck? But that's not the thing. The thing is when someone says that to dox another person, it's a threat. It's a threat. Yeah, that's a threat of violence. Like that's way different than hurty words. And yet I got banned. What the fuck? So
there he is. There he is.
This is
you little cuck.
Oh, this is great.
Yes. Dude, he has said on live episodes that he is a reformed or a recovering drug addict.
I got 7 years clean, bro. 7 years, man.
Fucking asshat.
I celebrated my 7th year clean April 23rd of this year, man. And dude, look, you gotta just make sure that you publish my greatest hits everywhere you possibly can.
Yes.
Dude, these are words, man. These are words. And it's just,
know what? Thank you. You inspired tonight's Red Pill episode on the Constitution and the First Amendment and what it actually means.
Right.
The First Amendment and freedom of speech is not for speech that we like. It is for speech that we do not like. Because depending
that's the whole point.
Power, like we saw it with the last admin,
right?
Depending on who's in power, they decide if you allow any kind of censorship. They decide what is acceptable and what's not. You fucking clown.
Yeah. I mean, look, man, like I remember COVID. I remember what the Biden regime did to censor everything on every social media platform. And, it's just like last night I had a great time engaging with, ape degens. Like, dude, you don't seem to understand. Like I have no hatred in my heart, brother. I'm just here having a good time. Like, I thought that it was like, we're going back and forth. The words are not violence, bro. Going back and forth with words, it was fun for me.
The one guy in the Discord that we went into a private chat and discussed, Kita and the token and stuff like that.
Right, it's a whole different thing.
Dude, he had some valid points. We both followed each other on X, and we had a very, very good discussion. And I am actually doing some more research into some valid points that it looks like he might have.
See?
On the opposite side, you have 8 degens and his little cuck ass that had to go and try to get us banned. So I gave them a 24-hour timeout since we got
one. Well, you know, it's just, you see, the thing for me, man, is that I'm not angry at anyone. Like it doesn't, like I don't, it doesn't get me upset. It's just like, I can't understand that type of point of view, you know, where you would, you know, get so triggered by words that you're going to go, report me to Discord police? Like, fuck yourself.
Let's go ahead and move on. I don't want this to take up the whole episode. But today we're going to be diving into, and I'm surprised we haven't done it yet, doing deep dives into Ethereum and Bitcoin. So I mean, and
So Mike, can I just want real quick, Ape Degen's in the chat. So I don't know if he's just, you know, a retard, but what he was getting at me about last night was saying that I sell courses, and I don't. Okay, all of the course material, it's the best crypto and DeFi education in the English language, and the course material is all free.
Any research?
No, I know. I'm just saying, man. I don't want someone saying that I'm selling courses, dude, because it's free. And give that stuff away.
And I've said that repeatedly because they were trying to say that we were shilling, that we were paid fudders, and you know, they were trying to say
we don't even make any money doing this.
Dude, they've obviously done as much research on us as they have on the KETA token.
That's about so. I would say that's fair.
Yep.
All right, my bad, Mike. I'm done with it.
No, you're fine. So Ethereum and Bitcoin. So we're going to do deep dives on them, and we're going to hold them to the same standard. You know, and again, you know, we're not saying our deep dives are prophetic. We're not saying that that they are going to dictate if you can or cannot make money off of these tokens. You can do short-term trades. You can, you know, scalp trade. You can do all of these things, and you can make money on short-term volatility. Absolutely. You can ape into a meme coin and make a shit ton of money. Absolutely. We are here teaching the fundamentals of long-term investment and how to hopefully, not guaranteed, find good, solid projects where you, the token holder, have a direct connection to the profitability, the revenue and fees generated by that project. It is a really simple concept. We are not saying,
it is.
Well,
it's
and we're not
simple.
saying that KETA is not going to be successful. We are not saying that they don't have a good technology. They very well could. It's very early on in the project. What we are saying is that as of right now, the tokenomics, and I'm going to play Ty's own words, the CEO of KETA, currently it is a cheap gas token and a governance token to where you can vote and nothing more. They are working on making it part of anchors.
Who does that guy Ty, Mike? That guy Ty, who does he remind you of? Because he reminds me of, you know, I've seen a bunch of these crypto guys who, you know, basically like dump on their following and then go buy gold watches and designer clothes and show that stuff off.
I haven't seen anything that would lead me to believe he's one of those.
I saw a couple of pictures last night from, you know, these guys in the Discord. They were showing me pictures of Ty, you know, just like showing off $50,000 gold watches and shit. So,
well, no, we can definitely do a deep dive into that.
That's never a good look. That's never a good look. I haven't.
But I want to keep them there. I mean, we can definitely do a deep dive on that, and I plan on it. I've started doing that actually because there is some rumors that there is some whale wallets, and this is rumors. I have not verified, but I've seen it multiple times, and it happens in a lot of crypto projects. Ahead of big news, you'll see a lot of tokens being moved to exchanges, and when the news comes out and that token pumps, then they are selling tokens. Who those people are, we still need to find.
It's called dumping on retail.
It is. But again, I need to verify who it is that owns those wallets. I need to verify, you know, that this is being done. So, you know, I just want to make sure that I preface that. But we will be doing that. And I would like to thank Ape Degens and all of his little cucks for poking the bear because
it was good.
Yeah.
Yeah. Fuck yeah, I'm retail. You kidding me?
Yeah.
You don't get outside of retail until you've got 9 figures, man.
Why do you think we're trying to educate people on, and why we're giving away free education, free deep dives, all this free freaking
The
educational
whole
material?
point is to go into this stuff eyes open. Like,
Exactly.
you can speculate on anything you want. You can buy anything you want, but, it's probably a good idea to educate yourself on what it is that you're buying before you pull the trigger, right? So,
Yeah. All right. So let's get into the news. Let's see what we got. I want to do a shout out, though. Let's do this real quick. I want to do a shout out to Canton News. So I've been using this quite a bit, and if you are a bull on Canton, or you're just thinking of investing in it because you keep hearing about it and all the bullish news that's going on, not saying go and ape into it or invest in it, but if you want to educate yourself, that's why we're here to educate. Is go ahead and run over to Canton News. It's just cantonnews.org. And this is the best place that I've found to find, the breaking news on
dude, Mike,
actual.
I gotta say, this Canton ecosystem is booming. It's
Yeah,
booming. There's something
yeah,
new every single day, and I don't even own any Canton yet. Like, I don't. I don't own any crypto right now. I'm
yeah.
waiting until October. But like, man, this is just amazing to me. Every single day, there's a new protocol, a new announcement, some new news item every day. And how many other protocols or chains can you say that about? There are a lot of chains and protocols that you can't say that about. This is it's good news. Good news for Canton.
No, and that's what I love about Canton. Unlike a lot of other projects, you don't really hear about any negotiations or talks. You only usually, like the majority of the time, by the time you hear about somebody doing something with Canton, it's they have already launched a super validator or a validator. They've already launched liquidity, actual TVO onto the chain. They are actually, they have done something. It's not discussions of, or it's not hype. It's not maybe or possibly, or they're looking into. It's this shit's happening. The token launch. The token launch was the fairest token launch I have ever seen in crypto. They 100% of the tokens went out into circulation. The team kept none. Nobody kept any. Anybody that has the tokens now is either a validator, super validator, or an app builder that earned them from contributing to the network. They either bought them on the open market, the Canton team included, and the great thing about it is that the Canton token has strong value capture because unlike KITA, where they're talking about making the token part of a requirement for validators to stake to be able to run a validator, Canton did that from day one. That is part of the tokenomics. That's
Now
part of the
that's true, but it's still pretty inflationary, as of right now.
no,
So
absolutely, absolutely.
that's something to be on the lookout for.
And you see that, Ape Degens? We point out the good and the bad about every project because we're not little bitches. All right. So and I'm loving this. Freaking keep
Oh,
it coming,
dude,
Ape Degens.
I
Freaking
know,
blow
I
up the chat,
know,
dude. Blow up
I
X,
love it.
please. Oh,
What,
dude, did you
what's
see that we actually got a shout out from the CEO of Zenith. Freaking the back and forth that I'm doing with these freaking individuals.
man? You know what?
He actually liked a
That's
bunch of our posts.
great. That's great news, man. The thing is for me is that I don't understand how you can be so overly zealous for a financial instrument. Like, this is
Yeah.
not supposed to be something that you get emotional about. You're supposed to be cold and discerning, and it's just I don't get it, man.
All right, so let's get into some news. So we had a Fed catalyst. The market rally was triggered by comments from Fed Reserve Chair Kevin Warsh, who indicated that inflation risks have decreased. This has renewed investor hope for potential interest rate cuts, providing a boost to risk assets, including crypto-related equities. I actually saw a post earlier where Crux of Crypto, a friend of the channel, He's actually doing a show later today. I promised him I'd mention this, where he's going to go through, kind of his portfolio picks. If you want to check him out, again, that's Crux of Crypto on YouTube. But he
Mike, I've
mentioned.
got I've got FedWatch up. So as you're speaking, if you want to pull up FedWatch, this could be valuable for everyone to take a look at.
So one thing that he pointed out is, I guess that there's a lot of stocks right now, and David, you can probably speak on this, that are getting a pullback. And historically, a lot of that liquidity is people taking profits. And historically, that often rotates into risk on assets. So what are you seeing, David?
Yeah, so what they're talking about specifically is momentum stocks. So, think semiconductors,
Yeah.
The semiconductor index, SMH, overnight, the Kospi was off. If we talk about the Kospi, it was off 7.9% overnight. That's the South Korean index, which is basically made up of Samsung and like one or two other semiconductor stocks. That's basically what is being traded there. But the thing is that the Koreans are trading it on like a lot of leverage.
Yeah.
So we've got this big momentum trade of Micron and SanDisk and Samsung and Western Digital and the entire semiconductor index. And what we're starting to see is a rotation a little bit out of those semis and into the next hyperscaler squeeze trade, which is looking like it's going to be capacitors. So there's different materials that are required to build out these data centers. The chips, that's just one. The RAM that these semiconductor plays make, that's just one of the play. That's just one of the squeezes, the stocks that have squeezed higher. Now it's looking like capacitors are going to squeeze higher too. And so as we're seeing a little bit of a rotation out of these momentum chip stocks, we're not really seeing that much of a pullback at the index level. The S&P and the NASDAQ, they're really not pulling back all that much, basically within a stone's throw of all-time highs. And so I think that Kevin Warsh, this is probably the most important thing to watch here, simply because, for us as digital asset investors, we still do need cheap money. Bitcoin seems to need, cheap liquidity to really be able to rally. And since we're getting so close to the end of the Bitcoin bear market, all I'm really looking out for, Mike, is, some type of crisis, some type of maybe just a small sell-off in the S&P and the NASDAQ. And, what would that do to Bitcoin? It would probably lead Bitcoin to make its final move to the downside. But what could trigger that sell-off? Well, I two pieces of news from yesterday. Alex Karp, his first name's Alex, right? The CEO of Palantir, Mr. Karp.
I believe so, yes.
Yeah, so Mr. Karp, he had like a 20-minute interview on CNBC, and famously, he's very animated, right? The way that he speaks, he's very honest. He doesn't mince words. He doesn't censor himself, and he speaks his mind. And he basically, didn't have the best things to say about the state of the hyperscalers and the state of AI for business use cases. Now, he talked up, of course, Palantir, because he's been able to, with something that he calls ontology, basically harness AI to make it more deterministic. But many companies are saying, hey, we're not actually generating an ROI with our AI spend. And, if you take a look at Meta yesterday, Mike, they signaled that they're going to, stop spending or at least start to curtail that spending. And they're going to sell what they referred to as, quote, excess compute. So this is how the end of this trade looks like it's going to go. You've got, excess compute. What if, Mike, what if these hyperscalers have already scaled out their data center infrastructure build to the point where there is more compute than is needed? So if XAI and Meta are selling excess compute, that just made me think yesterday, it's like, well, we've got these handful of AI plays in crypto, right? You've got, BitTensor Tau, a couple of subnets that are decentralized AI inference. You've got Render, decentralized GPU compute. You've got Aether, they allow you to lease, high-end equipment. You've got, Venice AI, VVV. They've got a more retail-focused application. And then what's that last one? Can't remember the last one. But, you've got these AI plays in crypto. And they're all doing kind of sort of something different, but they're trying to, it's Fetch AI. That's right, ASI. That was the last one. They're all trying to kind of sell inference or sell compute in some way. But, what if they just can't compete with the hyperscalers? What if, because I'll tell you, man, these Chinese models, OpenAI and Anthropic. Did you see the news about OpenAI today? Not even selling, giving a 5% stake to the federal government. And so this has been a long time coming. Yeah. Here's why. So a couple of months. So check this out. In October, I think it was October of last year. The CFO of OpenAI, which is, by the way, a closed for profit company, but the CFO, some lady. She, either intentionally or unintentionally let slip that they were looking for a bailout from the federal government because they weren't going to have revenues to support the $1 trillion plus of spending commitments that they've got. So she was talking about, we need a bailout from the federal government. And it seems as though the scuttlebutt on the street is that giving the government 5% of OpenAI could be like a backdoor way of getting some type of bailout, some type of relief. Because, if we just zoom out here, take a step back and look at what OpenAI and Anthropic have built, their model companies, and what are their revenues, not great enough to support a $1 trillion valuation for each of them. And who are they competing with? Well, they're competing with a vertically integrated, a company like Google. They're competing with now these Chinese open source model companies like Zipu. And they can't compete. They just can't compete. And you've also got businesses in the United States that have been spending ridiculous sums of money on, OpenAI API access and Anthropic API access for their employees and not generating any return on it. So, what these businesses in the United States are doing? They're saying, hey, you know what? We're going to Chinese models now. And so you're seeing business after business, going to Chinese models because they're free and they're better. And they're 90% cheaper for the most part, but you can also run them locally because they're open source, open weight. So OpenAI and Anthropic, man, they've got big, big problems. And this momentum trade, Mike, with the semiconductors, where Micron and SanDisk have just ripped higher, rallied higher. The semiconductors, this massive momentum, if this momentum starts to unwind a little bit, and then the hyperscalers start to say, hey, you know what? We're not going to be building another 1,000 data centers over the next couple of years because, number one, there's no power. And number two, we've actually got an excess glut of compute. And so we're just trying to sell our glut of compute right now to get some of our money back. And they, it looks like Meta was rewarded yesterday when they made that announcement, and off 4.5% today. It looks like Meta might fill that gap down to 570. That's another couple percentage points to the downside. But the moment that these hyperscalers start to roll over, and they all have, all of them, Meta has rolled over. Its all-time high was at $800. It's trading $586. Microsoft has rolled over. Its all-time high is at $555. It's trading $390. You take a look at Amazon, another hyperscaler, doing a little bit better than Meta and Microsoft, but still, its all-time high was at $280. It's trading $246. And then Google, the last hyperscaler, its all-time high was at $408. It's trading $356. Google's chart looks more like the semis than does Amazon or Meta or Microsoft. If I had to say, it looks like, Meta and Microsoft are the weakest of the four hyperscalers right now. But here's the thing, though. Microsoft has something special going for it. I saw a chart the other day of senators and Congress people buying Microsoft over the last couple of months. So these people are always insiders. They trade on insider information. Congress people and senators are famous, notoriously famous for doing that. So, yeah, man, it's going to be an interesting summer, that's for sure. And we're supposed to get one more drawdown before the end of this Bitcoin bear market. So I think we're still trading below the 200-week moving average on BTC. I can just verify that real quick because Bitcoin's rallied from 57K, 57.7, I think was the low. It's rallied to 61.5. It was up at 62 earlier today, still trading below the 200-week moving average, however. So I would just be really careful entering longs here. I know that a couple of days ago, beginning of the week, basically, I was saying that, I thought that crypto would bounce. It did bounce. And so just to bring it back to the Kevin Warsh news, Mike, and, interest rates here. So this chart that I'm sharing with everyone, this is the FedWatch tool over at the CME group. And what we're looking at here is, basically just a simple bar chart of, interest, the probability of, a particular interest rate band being set for the Fed funds rate at the next meeting date. The next meeting is in 27 days, and that's on the 29th of July of this month. And so what we can see down here, where it says 350 to 375, that is an interest rate measured in basis points. Over here, 375 to 400, again, basis points, so that's 3.75% to 4%. And this is 3.5% to 3.75%. What this chart is telling you is that the market is pricing an 82.5% chance that rates will be held steady at the next Fed meeting this month. And why this is important is because just a couple of days ago, the probability of a rate hike at the July meeting was, I think it was well above 50%. I think it was actually at or above 50%. So what that means is the probability of a rate hike is getting priced out. And so we're going to get another hawkish pause from the Fed this month when the FOMC meets again. And why is that important? Well, let's bring it back on over here to just, trading view real quick. Why in the world is that important? Well, we've got to take a look at crude oil. So why would Mr. Warsh be so confident that inflation is going to, cool? Well, because energy is cooling. Energy prices have collapsed from the Iran war spike. So now that energy, oil is trading $68, it could even push lower. If I wanted to throw down like a volume profile on here, basically we're trading at, where's the point of control here? That was, so the point of control is a little bit higher. So this is a weekly, and we're looking back over, this is maybe like 18 months of data, maybe about 2 years of data. If I zoom in here a little bit, we're going to see the point of control probably shift lower. Yeah. Over the last year, it looks to me like 63. So you might expect crude to trade down to 55 even.
Doesn't that point of control usually kind of attract,
it does.
It pulls, kind of those candles. And again,
it does.
I've never tried to be a TA guy, but I know that you are. But that's everything that I usually hear. Like when I talk, Drew, when he talks about it, when, Jason Casper, kind of, all the usual suspects on, on YouTube that, do the TA stuff. They always talk about the point of control and how it attracts, if it's above or below, it will, pull it up or it will pull it down.
So, I see something in the chat about, he's saying that we hang with furries. So, what's so pernicious? Well, but here's the thing, man. You know what's pernicious about that, though? So what he did last night is he posted pictures of someone wearing a mask in one of those ridiculous furry outfits. And he was trying to say that was me. And
he's talking about Jeff, because how Jeff does, he's silly like that. He'll put on like the Sailor Moon costumes and stuff. So he's talking about, BCR, you hang with furries. He's just trying.
Man, it's weird. That's weird to me.
Oh,
but
doing his best to insult. I'm having fun with him in the chat. Don't let him distract you
Nice.
from.
Sure. So if I'm taking a look at crude, right, and I think that crude is more likely to trade down to $55 than it is to bounce back up to 90 or $100. Well, what does that mean for producer prices? So if we take a look at US PPI, all right, so the producer price index year on year, what you're going to see is a chart that does not look good. This is inflation ripping higher. Now, the Fed and the BLS, the Bureau of Labor Statistics, they do everything in their power to manipulate the way that CPI is calculated to make it look like inflation is actually lower than it is in real life. But for anyone who goes to a supermarket and buys groceries, or goes to a gas pump and buys fuel, or pays for rent, or any of those input costs for your life, shelter, energy, food, these those things are all inflating.
That oil it plays a part in propane. It plays a part in all of the things, because where I live, I'm kind of off the grid. I'm out in the middle of the woods, so my heat, some of my heat.
Oh my God! Look what Jeff said.
Well, he was talking about furries, and I said my furry community's going to get mad now, and then so Jeff said, seriously, you don't want them coming after you.
So yeah, man, but this guy Warsh, dude, this is going to be, he seems like he's a sharp guy. Okay, with Mr. Powell, he, look.
Hold on, real quick, dude. Ape Degens, if you would just calm down and have fun with us.
I know, right?
You really need to get over yourself and just laugh and have fun. We're joking. David makes his living in crypto and DeFi. He's basically retired in his 30s. I retired at 40 out of the military. I have multiple businesses, real estate, live in the middle of the woods, living my dream life. And Jeff, he's a DJ and has fun, doing what he does. Dude, this is a hobby for us. You can try to smear us all you want and try to cancel us all you want for speaking freely.
Honestly, Mike, I do this more so for myself than anyone else. Exactly. I enjoy learning about this stuff every day.
Exactly.
And, there's always something new to learn. And that's why we put together these amazing deep dives, because there's always something new in this space. And it's always exciting.
We've said it a million times. Our Aave deep dive saved David's.
It saved me a lot of money.
Yeah. I mean, it's like you almost had your liquidity trapped, like 2 weeks ago.
Oh, dude, I put together in the media assets, Mike, in the media assets for the show. I was able to put together one piece of little meme video content. And now that I know how to do it, I can take my entire meme library and turn them into little video clips, not quite GIFs. They're basically like short video clips. It's really good, though.
Pull up Strategy real quick.
I think Strategy's had a pretty nice rally.
Yeah, it looks like it jumped like 12% or something.
Oh yeah, over the last couple of sessions. Well, I mean, it was down badly. So here's the thing, though, Mike. Let me go ahead and remove this volume profile, and I just want to go ahead and zoom out on this weekly chart. So, when in doubt, zoom out. Just because we've gotten a really nice bear market rally out of MSTR does not mean that this Bitcoin bear market is suddenly over. Okay, no. So there's price capitulation and time capitulation. And I don't think that we've seen price capitulation yet, but I don't have a crystal ball. And I really do not believe that we've seen time capitulation yet. I think that comes in the beginning of October. And so what that tells me is, okay, if we get a bigger bounce out of MSTR, at what level does MSTR tell me that the trend has swung back to the upside? Well, MSTR needs to get above and close above right here. If I just go ahead and throw that up there, 196. That's where MSTR needs to get above. So it needs to double in order for me to be able to say the trend has swung back to the upside. In the absence of that, what we're looking at is a series of lower highs and lower lows. So here's a high, a lower high, a lower high, a lower high, series of lower highs. You've got your low, lower low, lower low, lower low. This is the definition of a downtrend. And so it makes sense that we would get a bounce within this larger downtrend, right? And so we could even throw down a little bit of a channel. Maybe go ahead and remove this here. Let's just throw down a little bit of a parallel channel. Let me get rid of these drawn objects so that this is really clear for everyone. So we can go ahead and throw down resistance. All you got to be able to do to perform technical analysis, super simple. You got to be able to identify support, resistance, and the trend. That's it. So we've got resistance now. Let me clone this. And now we're going to throw down support. So notice how this kind of sort of acts as a level of resistance here. That's just a confluence that gives you more validation that this level is actually valid. This trend line is actually valid. So we've got a little bit of a channel here. So if strategy is going to continue to bounce, where would you now expect that MSTR would find resistance on the upside? Well, at trendline resistance, maybe at 140. That's a big move. That's a 40% move. Yeah. So, for MSTR to rally up to 140, what do you think Bitcoin's got to do? Well, MSTR is levered Bitcoin. Bitcoin would need to be back up at 70, I think, for MSTR to rally 40%. And so, how likely is that? If Bitcoin gets above 67,
not for a while. I mean, it's going to be a minute. If you follow the popular train of thought of October being the bottom, and where we could start seeing consolidation and over time, and then potentially start to see some slight movement to the upside over the next year, and it's I would expect further downside would be my guess. Gun to my head, that would be my guess.
I mean, throughout the rest of this month, I actually expect there to be upside in Bitcoin and in other digital assets. I think that we probably get more upside, but going from 61.3 to 67.3, that's where the next level of resistance is for BTC. So, that's another 10%. Bitcoin has already rallied off of its lows. The lows were at 57.7. It's already rallied, from trough to peak by almost 8%. So it would have to rally by an additional 10% just to get to resistance. What does that do to MicroStrategy? Well, it would obviously rally with Bitcoin. But will it be able to get to 140? I kind of doubt it. And is this bear market over? I doubt that too. So I've got my buy zone right here, Mike. This is my buy window for BTC. And once my Bitcoin buy window opens up, then I can start nibbling on the long side, but not before then. I'm just going to be a little bit more patient. I'm going to wait until the end of this month, see where Bitcoin's at. And what I really would like to do is just wait until this white line. That's the beginning of October. So that's the thought process, man. It's pretty straightforward. But what else is going on in the news though today? I'm curious. Anything jump out at you?
Yeah, we got so protocol upgrades. It looks like attention is shifting towards fundamental network improvements. Major upgrades for Ethereum, Solana, and Avalanche are in progress. Notably, Solana is working with an Alpenglow upgrade to remove on-chain vote transactions to improve efficiency, while Coinbase's base network recently completed its Barrel hard fork. So yeah, it looks like a lot of these different protocols are trying to ramp up for DeFi. Basically this upgrade of traditional finance. Base network is a huge player in that. You have you have Morpho. That's becoming a huge institutional play. Coinbase, obviously, and with the new Aerodrome platform launching this month, there is a bunch of institutional functionality that looks to be included with that. So it's something to keep an eye on.
Yeah, I certainly think so. The thing that I'm mostly watching right now, though, is what are the semis going to do, and what are these large cap tech stocks, Google, Amazon, Meta, Microsoft going to do? These are the leaders, and obviously Nvidia, super important. If we just throw down like a 200-day moving average for NVDA, it's sitting at its 200-day moving average, so it's trading at an important level of support. Now, Google is still well extended from its respective 200-day moving average here, but I think Amazon may have just broken back up above it. Yeah, Amazon held the 200-day moving average support. I think Meta and Microsoft are trading below their respective 200-day moving averages and pushing lower. So we're starting to see a little bit of a bifurcation in the hyperscalers in their performance. Meta, Microsoft trading well below their 200-day moving averages, whereas Amazon, Google, Nvidia trading at or above their 200-day moving averages. Same thing with Apple, trading well above its 200-day moving average. So, is there some weakness in tech? Not really. Meta and Microsoft maybe a little bit, but this trade doesn't show any signs of really unraveling, not yet anyway. If we take a look at SMH, the semiconductor ETF, this is the thing to watch out for, though. So here's that channel that it's been trading in for, basically since March, just ripping higher. And now that it's fallen out of that channel to the downside, where could semis go from here? Is a test of their respective 200-day moving average in the cards at $430? Well, if this were to test its 200-day moving average, the moving average would actually push higher by the time it gets down there, if it gets down there. And what would be required for semis to really roll over? Well, you would need, an earnings season where a lot of US Fortune 500 businesses say, hey, we're not generating an ROI from our token spend. That would be concerning. And I'd be willing to bet that that's what we're going to start to hear, is that businesses are going to say, hey, yeah, no, we're using Zipu AI. We're using Zipu API products now. We're not using OpenAI or Anthropic products any longer because it's just too expensive and you don't get the ROI. At least when you're using Chinese models, they're open source. So that means, for most Fortune 500 businesses, they could even afford to run them locally if they wanted to, if they've got data sovereignty requirements. So, yeah, the crux of this semiconductor trade is that there's not enough compute. And so the hyperscalers have to buy all the compute so that they can build out more compute. But what if there's a glut of compute? And what if these new models are just so much more efficient that you no longer need, a bazillion data centers to be built up? I think that we might see a bit of a rotation. And we're not really seeing that yet. We're just seeing this is literally the first crack in the semiconductor trade today, with semis falling out of bed here a little bit, on the day down 4.5%. And if we take a look at SanDisk, SanDisk down almost 13% today, breaking down below its respective level of support. So these are important cracks that are starting to show. Same thing with Micron. Micron just reported a blowout quarter last quarter. That was last week when they reported blowout numbers and rolling over and failing this level of support too. So, this is definitely something that you got to keep your eyes on, because these are the stocks that have been the leaders. They've been the so-called the generals. And when the generals of the market get taken out to the back and shot, then all of a sudden, you start to see, more and more stocks follow. So, has it happened? No, but something to watch. Now, I see you guys talking about Canton in the chat. let's take a look at CC. And I'm
they were
curious.
specifically asking about the wallet and if I was still using the Braun wallet. And I'm still using it. I'm only earning like 2 CC a day or something like that. I was earning like 50, but with the halvings, they've been drawing back on, because it was used to incentivize the growth of the network. It's obviously something that they don't necessarily need much anymore. So they've been scaling that back, which is good for token holders and early adopters, because that's less new tokens coming into the market. Whereas the burn is holding steady. So that is helping move it more towards that equilibrium or that deflationary aspect that we're hoping for. Again, hoping for. But I just keep it there because I am getting a trickle of CC, and potentially, it could come back, but I just haven't found anywhere better to put it to where, I can earn with it. So until I do that, I'm keeping it there, just to answer your question.
So Canton CC has a double top that's formed here on the daily. It's also broken down below its 200-day moving average, and it's trading just above what I think is an important level of support at 13.5 cents. So for anyone who is interested in building a position in Canton, I think
I gotta say something. Crypto is fucking awesome.
It is.
Friggin', it's like these KETA people are trying to smear us everywhere. And crypto is rallying around us in our support of freedom of speech. Freaking Tim Warren, they tried to tag him and say, are you guys going to work with racists? And basically he liked my post saying that Crux and many in this space are veterans and understand the supporting freedom of speech, especially speech we don't like. The CEO of Zenith liked my post this morning, where I was calling the keytards little bitches because they were trying to infringe on your freedom of speech. It's like, do I like everything that you say? No, but you know what? You're free to say it. Do you like everything that I say? Probably not. But you know what? I'm free to say it. Do I like everything that they say? Absolutely not. But you know what? You are free to fucking say it.
Yeah, man. I mean, because it's like, what's the alternative? The alternative is you live in an authoritarian world where you basically
whoever's in power decides what's acceptable speech.
And then all of a sudden you got neighbors informing on neighbors, man. Like it's just so crazy to me. Like the idea that you would report someone for speech, like that is really nuts. That is not the sign of a healthy society when you don't have free speech and when your fellow citizens report on you for saying hurty words. It's just like what? Well, what are you talking about?
And now he's saying nobody's denying your freedom of speech. He finds it disgusting and disrespectful. It's like, dude, you sought it out.
Okay,
you came to our Discord.
So like, all right. I mean, I fail to see the problem here. Like what did the disrespect touch you in the bad place? It's like, give me a break, man. It's so ridiculous. Like, the United States was.
Hold on. Here's some good news. Canton. So TradeWeb executes first real-time on-chain treasury trade via Canton. So it looks like TradeWeb, Franklin Templeton, Virtue Financial, Digital Asset, Societe Generale, and Blockdaemon completed a real-time on-chain U.S. Treasury for cash trade settled via the Canton network, marking a milestone for tokenized real-world assets. In the trade, Franklin Templeton transferred a tokenized U.S. Treasury to Virtue Financial in exchange for USDCX, the stablecoin on Canton. TradeWeb supplied the execution and price discovery, while Canton Network handled synchronized on-chain settlement between the two assets. This is live.
That's a big deal.
Option.
That's a really big deal.
Well, I mean, get into that.
So the reason why that's such a big deal is on all these chains, Mike, outside of Canton, basically all of them. I think maybe on, what is it? Not the middle chain, but what's that one where it's a governance token, Ondo? I think maybe on Ondo you can actually do something with treasuries. But you know how there are all these different chains where institutions have been tokenizing so-called RWAs. What that really means for the vast majority of these RWAs is there are US treasuries, tokenized US treasuries on that chain. But here's the thing. If you've just got a US treasury asset on a chain, a tokenized asset on a chain, like, so what? Like who cares about that? What you're going to do 4%, 4.5%? That's super boring, super vanilla. It's not enough value. You need to be able to borrow against those treasuries. You need to be able to apply leverage. And so you can't really do that on most of these RWA chains, but you can on Canton. So that immediately makes the US Treasury asset not just a productive asset, but a capital efficient asset because you can borrow against it. So if you can supply treasuries on Canton, borrow dollars against it, let's say you're earning 4.5% on your treasuries, you borrow dollars at 3% maybe. Now you've got 150 basis point spread between what you're earning on those treasury assets and what you are paying to borrow those dollars. Now you can take those dollars and you can go do something else in fixed income if you want to. Or you could buy equities with them, who knows, whatever you want to do. But it immediately makes those treasury assets very productive. And that's what almost all of these other chains are missing. So, when we talk about, the browser wars and the operating system wars, and now we're in the blockchain wars, right? When we talk about these blockchain wars, it's going to be winner take most. Liquidity goes where there is already liquidity, so that means we're talking just a couple of chains, really. Liquidity likes liquidity. So it's going to flow to where it's treated best and where there is more of it. And that's looking like it's just a handful of chains. Canton being the largest of them for settling daily repo volume. And that's a big deal, man. That's a really big deal. The only problem is the CC token is still super, super inflationary. That's the only problem. So what's you're laughing?
Oh, dude, just look at this freaking ape degen. He just keeps on. He thought that Crispy was going to get offended, because he called us racist, and he thought that Crispy would get offended. Go into Discord. Go into Discord. You'll see. And dude, Crispy was in the Marine Corps. Dude, what David said in the Discord, he heard daily in the barracks. I guarantee
you gotta get over it, man. You gotta
really
get over
this, dude. You blowing up our chat and our Discord, and I'm guessing it's you on X. You're just getting us more engagement, dude. Thank you.
I mean, I like it. I like it, but at the same time, Mike, it's kind of sad because, can you imagine the mindset that you've got to live in where you get offended by speech and lash out and report on speech? Like that's a sick place to be, man. Yeah. So I wish him the best. I hope that he's able to get over his mild case of retardation, but you never know.
Well, you know what? And I'm glad because it's going to be a great episode on the Red Pill tonight. We're going to talk about the First Amendment, and I think Taylor's going to show up. One of my other buddies is going to show up, and you and Jeff and me. And I don't know, maybe I'll see if like Crispy or somebody like that wants to wants to come on, because I would love to have a full panel of 6 people and really talk about genuinely talk about not just go off about these clowns. I actually want to stay away from that. I want to actually talk about the First Amendment. I want to stay on point and talk about the First Amendment and what it is and what it means and why it's there.
It's so important. It really is, because when people like aped degens are given authority and allowed to forcibly censor, look, you're on the wrong side when you got to shut the people up who are speaking on the other side. When you can't allow speech, that's how you know you're on the wrong side.
Well, we did a deep dive on Kita, a project that he's bullish on, and he got so upset that he found something to latch onto which is, your freedom of speech and some of the things that you said that I agree. I mean, it's not that those are your personal feelings about those
No,
groups.
it's supposed to be controversial. That's the
Exactly.
whole point.
So, the fact that he is using that to try to cancel us because of what we said about a project he's bullish on proves our point and the Constitution's intent on why you should not infringe on anyone's freedom of speech.
Especially the people you disagree with. Especially the people you disagree with. Like, that's the speech that needs to be, like, enabled even more. So what I love also is whenever you've run out of things to say, people like to resort to ad hominem attacks. Yeah. So, he's talking about my history with substance abuse. And I mean, brother, I got 7 years clean, man. So, like, yeah, and I'm public about that too. So I was actually, when I was walking on the beach this morning, I was thinking to myself, like, dude, I'm just so grateful to have been able to get over that. And I was thinking about, like, the first 2 years, and, like, looking back on it now, dude, I was in the first 2 years, like, even when I had 2 years clean, I was still sick, So yeah, man, but bringing it back on,
you did great things, dude. I mean, like, when you were up here and you started working out, and then just kind of some of the lessons that you learned here just in that long weekend that you took home, and just your continued.
Not only did I take it home,
physical fitness and getting up early,
I had a breakthrough after coming back from your place, Mike. And the breakthrough was a much more disciplined diet. And what happened was, all of a sudden I started waking up early in the morning before my alarms, like, feeling good for the first time in my life ever. Never had that before. And when I was walking on the beach this morning, I was thinking about that. And I was just very, very grateful for that.
Alex Winfield, I have 3 years and a half clean and sober. Dude, fucking that's badass. Fucking congratulations, dude. That's fucking awesome.
Congratulations, man. So I want to caveat my recovery. So here's the thing. There are a lot of people in the, I guess you could call it the recovery space, the drug and alcohol treatment space, who would say that using cannabis or drinking alcohol does not make you clean and does not make you sober. So obviously, if I drink alcohol, I'm not sober. Okay. If I use cannabis, does that make me not clean? Well, I would put it to you this way. If someone uses psychiatric medications prescribed by a doctor, those psych meds fuck you up, man. So if that person abstains from every other substance, but they're on these psych meds, is that person clean? There are substances that you can take to help manage an opioid addiction, like Suboxone. If someone's on Suboxone, but they're no longer using opioids, is that person clean? And so for me, recovery to me means, not using what my drugs of choice were. And also, I don't experience any, it's not like I'm compulsive. All of the bad effects from using a substance compulsively, like, losing your job or losing your wife or losing your kids or losing your house or losing your freedom or losing your life, where you can't stop using the substance despite these negative impacts on your life. I don't have any of that from a little weed vape, bro. And I also don't have any of that from having a couple of drinks either. So I would consider myself to be recovered, recovered. But I know that there's a lot of people who would disagree with that, and I understand their point of view. I'm also a credentialed counselor in that space. So I was thinking about this morning, Mike, I was actually thinking about either donating my time or, like, spending some time doing drug and alcohol counseling here in South Florida. I don't know if that would actually work out, but I really enjoyed doing that because, I've lived that. And I remember a doctor that I used to talk to and work with every day. She told me one day that, like, when you get through something like that, that you almost have an obligation to be of service to others. And I didn't like hearing that because, honestly, there's only so much you can really, so much time you can really spend and, immersed in that space. It does take a toll on you. But I was thinking maybe a couple hours a week might not be a bad thing for me to do. So Yeah, man. But what else we got going on here? You want to hop in and learn a little bit about the Intel library, about Bitcoin and ETH today? What are you thinking?
Yeah. Let's go into the deep dives.
Sweet, man. Let's check this out. So, all right. I did watch the Bitcoin one yesterday during the premium call with a couple of the guys in the school community. So I watched this one yesterday. Why don't we start off with ETH? This will be interesting. Not quite sure what to expect here. So let's see. Let me go ahead and I'm just going to hit play. I'm going to actually move this over to the other side so I can see everything going on here too. Here we go.
By the year 2026, the popular historical narratives framing Ethereum as ultrasound money, or a form of digital gold, have completely expired. The network has returned to a mildly inflationary regime, experiencing a net supply growth of approximately 0.23%. This slight inflation is a mathematical outcome of Layer 1 migrating its execution load to a roll-up-centric roadmap. To evaluate ETH, treat it as a triple-point asset. This chart shows 3 pillars. First, a productive capital asset, yield-bearing equity driven by staking and fee burning. Second, a digital commodity, mandatory fuel for block space. Third, non-sovereign money, trustless collateral backing the decentralized economy. Evaluating Ethereum's economic health requires discarding single metric models and measuring its value capture across all 3 of these asset classes simultaneously.
Okay, I want to just back it up real quick to right here.
Fuel for block space.
This last part.
Third.
Okay, non-sovereign money. This, to me, is one of the most critically important things to look for when I evaluate a coin or a project or a protocol or whatever. I'm looking for permissionlessness. That's what I'm looking for. And Bitcoin is the ultimate in permissionlessness. Ethereum, however, is also on the layer 1. Ethereum on the layer 1, spot ETH on the layer 1 is as permissionless as you can get too. And that's why, even though I might disagree with the Ethereum Foundation mandate or the manifesto, the way that it was written, the style that it was written in, even though I dislike that style, what I really like is I like the sovereignty aspect of it all. I really do. And that's part of that cypherpunk ethos. So I just wanted to hone in on this, the non-sovereign money piece. People like to say that, ETH is great money. I don't know that it really is, but is it permissionless and sovereign? I would say so.
Non-sovereign money, trustless collateral backing the decentralized economy.
Right.
Evaluating Ethereum's economic health requires discarding single metric models and measuring its value capture across all 3 of these asset classes simultaneously. Looking closely at its equity properties, the EIP 1559 base fee burn functions as a programmatic stock buyback program. The network uses its organic transaction demand to retire outstanding tokens, steadily increasing the fractional ownership of all passive holders. This formula calculates the threshold for the burn to generate deflation. The daily burn must exceed daily issuance. Applying 2026 metrics, gross daily issuance is 2,683 ETH, scaling against the 38.9 million ETH currently locked in staking. The network's consensus topology shifted heavily toward these staking contracts following the Pectra upgrade. EIP 7251 raised the maximum validator balance from 32 ETH to 2,048 ETH. This allowed institutional operators to consolidate infrastructure. Active validator indices dropped to roughly 897,000, while corporate treasuries built up massive entry queues to deploy capital.
So, Mike, 897,000, does that mean 897,000 validators? Did I understand that correctly for Ethereum? I don't know that I did. I want to replay that part because we're always talking about decentralization, right? And people like to say that, Bitcoin is extremely decentralized. It is. Monero also extremely decentralized. A lot of validators. But I hear that about Ethereum too, but I don't. Let me play this again.
Operators to consolidate infrastructure. Active validator indices dropped to roughly 897,000, while while corporate treasuries built up massive entry queues to deploy capital. These validators generate a base yield of roughly 2.78% from consensus issuance. Running MEV Boost for execution tips adds a 10% to 30% uplift to that baseline return. For investors seeking higher leverage, liquid restaking tokens, or LRTs, have emerged as the primary vehicle for accelerated yield generation. LRT mechanics stack the base consensus yield with secondary rewards from securing external actively validated services. This pushes the total return up to an 8% to 12% APY.
No, it doesn't. No, it doesn't. So if you have ETH and you stake your ETH and restake that token, so you got ETH LSTs, liquid staking tokens, and then you got ETH LRTs, liquid restaking tokens. So like it's a derivative on top of a derivative, okay? And so what it's used for is so that the same piece of collateral can secure all sorts of different apps. And, EigenLayer, I think, really pioneered a lot of that. So, but can you get 8 to 12%? I mean, only if you apply a lot of leverage. And, to do that, there's a lot of risk. So if you're supplying ETH LRTs, like Lido wrap staked ETH, then you've got to borrow ETH against your wrap staked ETH. And so that means that the wrap staked ETH has to be generating significantly more yield than what your variable borrow rate is. So if you're supplying Lido wrap staked ETH and you're earning the native LRT yield of like, I don't know, what is it, 3%? Then you've got to be able to borrow ETH against that for significantly less than 3% to make that work. And I don't think that trade is really valid right now. Maybe you can use like a Pendle PT, but even that is kind of dubious. Like you might be able to get 8 to 12% if you used a lot of leverage and your collateral was a PT. But I don't know about you, I don't want to run that trade because if the collateral depegs, you're fucked, So yeah, I wouldn't want to run that trade.
However, this yield stacking introduces severe structural risks. In April 2026, attackers exploited cross-chain vulnerabilities in Kelp DAO, draining over $280 million from the protocol. As a productive capital asset, ETH generates powerful sovereign cash flows, but forces investors to weigh baseline yield against compounded smart contract risks of restaking markets. This balance scale illustrates the 2026 debate. Are Layer 2 rollups economically parasitic or symbiotic? The parasitic argument highlights transaction costs. As execution migrated to Layer 2s, median Layer 1 fees collapsed by 99.68%, dropping to fractions of a cent. Critics point out that this fee collapse starves the EIP 1559 burn engine, trapping the network in an inflationary state. The symbiotic reality requires looking at how the Fusaka upgrade overhauled data processing via peer data availability sampling, or PeerDAS. PeerDAS expands network capacity by sharding data custody across nodes, allowing Ethereum to safely process a target of 48 data blobs per block. This isolates the dual-fee blob market, featuring 2 parallel pipelines, a narrow path for standard gas and a massive pipeline for ephemeral data blobs. Rollup operators must purchase this dedicated blob space using native ETH, burning it directly at the intake. To prevent node bloat, consensus nodes automatically prune these data blobs after approximately 18 days, maintaining performance while keeping Layer 2 execution cheap. During peak periods, high-throughput consumer applications generate a phenomenon known as blob MEV, quickly saturating the 48 blob capacity. This saturation triggers exponential spikes in the blob base fee, burning massive volumes of ETH in short, aggressive windows. Layer 2 networks are deeply symbiotic with the base layer. Long-term ETH deflation relies entirely on these rollups consuming and burning the digital commodity of blob space.
Oh, do you understand? You get it, Mike? I get it now. So you know how everyone's been talking about, the Layer 2s being parasitic, that the Layer 2s were like a vampire attack on the Layer 1? Well, what this research is saying is that it's exactly the opposite because of these data blobs. That's what it's saying. It's saying that, when there's more transaction volume on the Layer 2s, the amount of ETH that is burned pushes Ethereum to become actually deflationary. Remember, Mike, we were talking about that yesterday. We couldn't figure out, just looking at DeFi llama data, whether ETH is inflationary or deflationary. Well, this piece of research seems to say that ETH is actually deflationary because of the layer twos. When many people say that, the layer twos are a parasitic attack on the layer one. So this is really good news for ETH.
At an industrial scale. Moving beyond base protocol mechanics, we have to examine the macro digital economy actively routing on top of Ethereum. The network has evolved out of its early role as a sandbox for DeFi speculation. It is now the global settlement layer for over $158 billion in stablecoins. This data table breaks down the top layer 2 networks, specifically Arbitrum, Base, and OP Mainnet, and highlights their massive stablecoin float, representing billions in locked liquidity. This float represents real-world dollar-denominated economic activity, from cross-border remittances to institutional corporate payments. Even though these transactions occur in stablecoins across secondary layer 2 platforms, native ETH remains the universal unit of account and the pristine collateral backing the entire on-chain financial system. ETH's monetary premium is sustained by its necessity. It acts as the ultimate trust-minimized counterparty asset for a fragmented, multi-billion-dollar modular economy.
It said trust minimized. I like that.
Returning to our original valuation chart, we can now map these 2026 realities directly onto the triple point framework. As a digital commodity, ETH is structurally consumed to pay for modular data availability, relying on the constant saturation of the 48 blob target. As a productive capital asset, it yields compounding interest via validation, while capturing layer 2 revenue through programmatic buybacks. As non-sovereign money, it operates as pristine collateral, securing over $158 billion in real-world dollar settlement. Analyzing ETH strictly through the lens of passive digital scarcity ignores its mechanical architecture. In 2026, Ethereum functions as the primary capital engine of the decentralized web, with its valuation anchored in active structural symbiosis.
Man, amazing. Okay, so let's go ahead and minimize this. Let's bring it back. Let's take a look at a chart. So ETH, plus 5.5% today, and trading 1698 right now. However, notice, do you see in your mind's eye, Mike, do you see this level of resistance? Let me just go ahead and draw this in, because even with all that, ETH has been dog shit for years. Like, if you bought ETH in 2021, you're flat. You know what I mean? Like, that sucks. That's not fun. Who wants to hold something that's going to move sideways for 5 years? ETH has upgraded massively since 2021, however. And it seems as though it's on the precipice of breaking out. So you see this level of trendline resistance that I just drew in here? And if I zoom in a little bit, we'll be able to see this more clearly. So ETH is getting very close to a level of trendline resistance here, right there. So resistance comes in at like 1800, 1780, 1800, something like that. What ETH likes to do, the pattern that it likes to put in, is it will break out above a level of trendline resistance at this angle. This angle for ETH, it likes to break out, and then it'll retest. And since we're still in a bear, I think breakout, retest, and fail into October. But ETH is looking really, really interesting here at $1,700. I got to say, now that I know a little bit more about blobs, those blobs for the layer 2, because that was really the sticking point for me, was how does Ethereum get to deflationary? Because we couldn't figure out whether it was inflationary or deflationary yesterday. So how does it get to deflationary? It looks like it's literally the blobs that get it to deflationary. And, but the problem for me too is this chart's looking ugly. You got a double top, wasn't really able to put in much of an all-time high this past bull. All this buying, this is like, you could call this the Tom Lee bull. That's basically what this was right here. Tom Lee, buying those ETFs or whatever, hand over fist. And so now, look at the pattern that ETH is starting to put in on the weekly, starting to flag off again. So if ETH pushes up to like 18 or 1900, that would be another bear flag. So, you got to come, here's the pole, and you flag off, push a little bit higher. That completes the flag pattern. Final leg down, buy ETH at $1,200. That would be in a perfect world. ETH would put in a double bottom after putting in the double top, and then rip to $30,000 a coin. You know what I mean? Like, ETH does that. It just has these moves where it'll, rip 15% in a day, a couple days in a row, seemingly for no reason. So, yeah, I'm actually more bullish on ETH after watching that piece of research, Mike, than I have been in quite a long time, because I couldn't quite figure out whether it was inflationary or not. So, you definitely want to be able to buy below a 200-week moving average, that's for sure. And, just to get back to the all-time highs from 1700 to the all-time highs again, we're talking about a double. You double up 200%. So yeah, you'd have something to think about here, though. Something to think about is this. So there's a level of trendline resistance that Bitcoin was able to get up to during its last bull market that Ethereum was not able to get up to. So you see all the way up here, Mike, this level of trendline resistance up here for Ethereum. The last bull, ETH didn't make it up to trendline resistance. And up here, however, during the next bull market, I'm really thinking that ETH could touch trendline resistance up here, man. I think that would be kind of cool. And if you take a look at BTC, its level of trendline resistance comes in during the next bull market around 170,000, maybe something like that. So I think it'll be a really, really interesting next bull to see what ETH does. It would not surprise me during the next bull market, which should last from the end of this year to the beginning-ish of 2029, something like that. If that actually happens, ETH rallying into 2028 up at $10,000, $11,000. You think that's possible? I mean, anything's possible, I guess, but that would be a nice 5 or 6 bagger. Not bad, man. I'm thinking that this could be a legit level. And dude, why is this guy Ape Degens, man? He's just like, you can only take so much of this type of just retarded shit, man.
He's trying to take a victory lap. So just so everybody knows, I guess Crux, he tagged Crux in a post with all of his little screenshots that he's been trying to smear us with. And Crux said that, thanks for bringing it to my attention. I can't be associated with this, and that's his choice.
That's fine.
I mean, it is what it is.
I mean, honestly, bro. Honestly, like, I don't have much respect for people who shill XRP. So,
but the thing is he's worried about his brand. He's worried about his channel, and you know what? I can respect.
He should be worried about shilling XRP.
Well, I think personally, and I just did a post on X. That's kind of what I was focused on. Is that my first and foremost? Like I said, this is a hobby. First and foremost, my dedication to the Constitution and the oath that I took to support and defend it for all Americans, if I agree with them or not, will always take precedence over a channel or a brand. I support everyone's right, the First Amendment, Second Amendment, all the amendments. That is what I took an oath for. And if it crashes the channel, me supporting people's liberties and freedoms, even dumbasses like Abe, so be it.
I mean, I don't think that anything's crashing, man. And like, if I just take a step back and look objectively at it, like,
I'll be honest, dude. Our subs, since they started their little campaign, our subs have been pumping. We've got more subs. We got more people watching, watching our streams. We've gotten more engagement in the chat, more engagement on X. So 8 DGens, you're taking a victory lap on helping us. So thank you very much.
No, but I mean it's all good. But I want to speak to the stuff about Crux. All right, you seem like a friendly guy, but like, bro, like you can't be shilling shit coins. Okay, I'm not going to be able to respect that. Like Kita is a bag of shit, and so is XRP. XRP is some type of fraud, and like I have no respect for people who are going to put out content for the sole purpose of getting views. Like that's bullshit, man.
To be fair, the content he puts out isn't necessarily,
what did he tell me when I was asking him questions? He was like, well, Kita goes up because what? Speculation has value. Like, dude, give me a break, man. Like, he's a smart guy. I think that if you're reaching for views, like that's some bullshit, man.
I think what he meant by speculation has value is it does, because there's plenty of people that ape into projects based off speculation, and good bullish news that comes out happens with Kita all the time. They make that ass group, signing came out and the token pumped. And I'm doing some deep dive research right now that ape you're not going to like, because I'm starting to see where there was a lot of wallets that looked to be whale wallets, potentially of the team, that was moved to exchanges ahead of that announcement that sold off into the pump. So not a good look.
Yeah, no, I mean, but that's kind of what you should expect. You should expect stuff like that, right? Like when I take a look at Kita, like this is such crap. And, for anyone to be out there, like making content for the purpose of just getting views, like, dude, that is so inauthentic. And, that's basically what he told us too, behind the scenes. So, like, dude, I would rather just, seek truth. That's what I would like to do. And, it's pretty easy to spot. Most of crypto is pretty scammy, dude. Like most of it is.
Absolutely.
Absolutely. And so like,
that's why we started this channel. Me and Jeff initially, and why you joined us, is we're all aligned on, we're going to point out the good and the bad in crypto. If on the projects that we're invested in, we do it with Canton. We're constantly pointing out it's still inflationary. Until it becomes deflationary, I don't see any real price movement coming.
And
unless
so
it's
like,
a speculative pump.
So Mike, you were talking about this dumbass doing a victory lap. Like, bro, honestly, like, look, Crux seemed like a nice guy, but do I really want to be associated with a channel that's going to be pushing XRP? Like, no. I do. I want to collaborate with everybody, because then we can debate. It's so gross, though. But like, to push that, it's like that's a scam, man.
Opinions. I want people that are bullish as fuck on XRP to come on, so that I can talk to them and say, okay, back up why you're so bullish, and I'm going to explain to you why I'm so bearish, so that people out there, like like this guy who's spamming our chat and helping our engagement, can listen to both points of view, and they can decide for themselves. We are here to educate. We are here to give you all of the facts, give you all the points of view, all the different ways of looking at these investments, and then you decide. You are an adult, and you can decide what you want to throw your money into and potentially lose it, because we are in a highly speculative market. Crypto is highly speculative still. There's still a lot of unknowns. So, this is still a casino. And all I want from this channel is for people to get it good quality information. And you can disagree with it, Ape, but it's good quality information. Just because you don't like something and you're going out of your way to try to cancel it.
What's so funny too, Mike, is he's talking about that he could make this in 1 minute by vibe coding. Brother, that makes it pretty clear to me that you have no idea what you're talking about. So like, let's take a look here. Let's take a look here at Bitcoin. I watched this yesterday, Mike, and honestly, it doesn't look all that good for BTC, man. It's not looking too hot. So let's check this out.
In the second quarter of 2026, the Bitcoin network crossed a defining programmatic threshold. At block height 9,040,000, the 20 millionth Bitcoin was officially minted, locking in a permanent mathematical reality of extreme scarcity. This visualization breaks down the supply dynamics. With over 20 million coins in circulation, exactly 95.45% of the total 21 million cap is active on-chain. That leaves a minimal emission tail of roughly 954,000 coins to be distributed over the next 114 years. Based strictly...
Okay, so this is the problem. The problem is the block reward. That subsidy is going away. And so if there is not sufficient transaction volume on the Bitcoin layer 1 on mainnet, then miners may not be incentivized to keep their machines on. That is going to hurt the security of the Bitcoin network.
On protocol mechanics, this rapid approach to the terminal supply cap should have heightened the asset's supply inelasticity and triggered a severe price expansion. The empirical data shows the exact opposite. This chart plots the 95% supply line against the market value to realized value, or MVRV z-score. The valuation curve collapses to a deeply compressed 0.3, dragging the spot price down to roughly $58,490. This severe compression is a direct result of a sustained higher-for-longer fiat interest rate regime. Global M2 money supply growth has contracted to roughly 6%, draining the liquidity cushion that historically supported digital asset price expansions. The macroeconomic suppression of asset prices is actively exposing a mathematical flaw in the network's underlying Layer 1 security budget. The structure of institutional ownership has evolved into a heavy burden on market liquidity. During the first half of 2026, U.S. spot Bitcoin ETFs experienced severe and sustained net redemptions. This fluid dynamics model visualizes the mechanical impact of those outflows based on data from Citi Research. In June alone, ETF issuers liquidated over $4 billion in spot holdings.
Okay, so I heard a guy yesterday talk. Oh, it was Gareth Soloway. I like Gareth Soloway. He's pretty good. He was talking about window dressing and window undressing. So this term is used to refer to what institutions do at the end of a quarter. At the end of a quarter, if a particular stock has performed really, really well, and that institution wants their clients to see in their statement, hey, look, my money manager bought that stock that was ripping this past quarter. Well, they might window dress by buying the stock in the last couple of days of the quarter. The same thing works in reverse, however, where the asset that has been underperforming, institutions might window undress, meaning sell that asset so that it doesn't appear on their client's statement, just to make the money manager look better. So there has been a lot of outflows, from these Bitcoin spot ETFs, but Bitcoin really hasn't capitulated, not yet. A Bitcoin bear market of negative 54, 55% from peak to trough, that would be the shallowest Bitcoin bear market ever. So, is there some more downside ahead? Well, we probably still have time-based capitulation to wait for.
By IBIT and FBTC. For every $1 billion withdrawn from these centralized pools, Bitcoin's structural price floor drops by roughly 3.4%. Corporate treasuries are amplifying this downward pressure. Legacy buy and hold strategies have collapsed. Strategy Inc., historically the largest corporate holder with a strict never sell mandate, adopted its digital credit capital framework in June 2026, pivoting to actively liquidate up to $1.25 billion in Bitcoin to fund cash reserves and share buybacks. While corporate entities act as active sources of market supply, sovereign nation-states are executing diverging accumulation strategies. The United States currently holds over 328,000 Bitcoin, primarily acquired through judicial forfeitures. Under the proposed American Reserve Modernization Act, these seized assets would transition into a strategic reserve, locked behind a mandatory 20-year holding period. By contrast, El Salvador relies on direct market acquisition. The nation conducts programmatic daily purchases of exactly 1 Bitcoin, steadily expanding a treasury backed by its state-run geothermal volcanic mining operations. The financialization of Bitcoin through ETFs and corporate balance sheets has integrated the protocol directly with traditional risk assets. Liquidity and price discovery are no longer governed by programmatic halvings, but by the macroeconomic flow of fiat capital.
I got a problem with that last statement because, here's the problem for me. People have said that Bitcoin's price, that the halving dictates Bitcoin's price. That's why we've got a halving cycle, or that's why Bitcoin follows a 4-year cycle, is because of the halving. People have said that, Bitcoin is positively correlated with money supply, US M2 or global M2. They've said that Bitcoin is positively correlated with manufacturing growth, like a measure like ISM. There's so many things that people have said are the governing factors behind that Bitcoin cycle. And I can't point to any one of them and say, yeah, this is the reason for the cycle. So that's why I kind of like to call it a prophecy.
Governed by programmatic halvings, but by the macroeconomic flow of fiat capital. This macroeconomic price compression trickles down to the physical hardware securing the ledger. To survive, the network relies on an immutable mathematical rule. Total miner revenue must always be high enough to incentivize continued computational work. This equation represents the core tokenomics of Bitcoin security budget. Total revenue equals the programmatic block subsidy plus user transaction fees. Right now.
So this is a problem. We've got to learn, just focus in on this information about the miners and their business model.
In the fifth halving era, that block subsidy is cut to just 3.125 Bitcoin. For this security model to persist as the block subsidy shrinks towards zero, transaction fees must rise to replace the lost revenue.
Right.
This chart breaks down actual miner revenues in mid-2026. The network relies almost entirely on newly minted coins, with the block subsidy funding 99.14% of operations.
That's not good.
Transaction fees provide a razor-thin 0.86% slice, with the average Layer 1 fee sitting at a negligible 38 cents. Miners are caught in a severe financial deficit. The estimated all-in cost to produce 1 Bitcoin hovers around $137,800.
Okay, so I think that the source material got this one wrong. I don't think the all-in cost to mine 1 BTC is 137K. However, I do believe that it is greater than the current spot price. So I don't think that unless, these miners are, unless you've got free electricity, basically, I don't think it's profitable to mine Bitcoin unless your electricity is free. So if you're, El Salvador and you're using electricity from a volcano, okay, well then maybe it makes sense for you to mine Bitcoin. But if you're someone like, I think later on in this video, we're going to see a bunch of the big corporate miners, because most of them are in the US. They're really big corporate miners. And what they've been doing, Mike, is they've been shifting away from their Bitcoin mining businesses. And many of them have sold off their Bitcoin altogether, simply because it's not profitable. And these are publicly traded companies. And what they've been doing is they've been rotating to AI instead. So, this is
a lot of them have been switching their compute power over to AI because it's more profitable. I know that, however, there has been a case made for Bitcoin being sold off by the miners is just part of their schedule. They just have a locked in schedule that they are selling Bitcoin on a timeline, and I don't have any data to support that. Basically, just saying that is a narrative that I've heard across multiple news sources.
Yeah, and it's something I was thinking about walking on the beach this morning was like, at a certain point, you've got to believe in something. Like, how much research have we presented on the history of money, Mike? Where we're talking about, you had the rye stones and you had those sticks that the British used. And, you've had gold
tally sticks and all that.
Tally sticks, yeah. We've had, coinage, gold and silver coins. We've used seashells. And the reason why these monetary systems worked is because people believed in them. So, Bitcoin is a non-productive asset, doesn't generate any yield, right? So that means you've really got to believe in number go up. And I want covenants for BTC. So the question that I pose to you, Mike, is do you believe? Do you believe? Do you have faith? Do you have faith in the Bitcoin?
Honestly, I mean, I'm going to hold a bag of it because I know that it,
Yeah.
just because of mind share and, because there's so many institutions buying it and, the ETFs. I mean, I see it, being, a long-term investment. Am I full porting into it? No. Am I full porting into anything? No.
Full send. Full send, bro.
I can't do that on any crypto project. I mean, I see a case to where Bitcoin eventually could go away. I mean, really, the only thing that is making it valuable is the fact that it's perceived as being valuable. It's
Belief. Yeah.
Yeah. I mean, if
Yeah.
everyone
Well,
woke up,
decentralization too.
yeah,
But we just learned, earlier today about Ethereum. Ethereum is, very decentralized too. And it is also permissionless, and trustless. And those are super important things. And it seems as though not only is ETH permissionless and trustless, but it's also productive. If Bitcoin were to suddenly become a productive asset, that would be pretty awesome, man. And, I love Bitcoin. I love it because of it's the sovereign
decentralized nature.
exactly. Yeah. But does it take 137K to produce one BTC? No. Does it take more than what the spot price is though? Yes.
While the spot price remains suppressed below 60,000. When industrial operators are starved of capital and transaction fees fail to bridge the gap, the physical security of the entire ledger is compromised.
Right.
If mining becomes widely unprofitable, network hash rate will contract, lowering the economic cost to attack the blockchain and opening the door to devastating game-theoretic vulnerabilities.
Right.
In a fee-starved regime, the primary threat is selfish mining and undercutting. If a block contains highly lucrative transaction fees, competing miners are financially incentivized to ignore honest protocol rules, snipe the transactions, and mine a competing block at the exact same height. Instead of building upon the newly propagated block to
That would
advance the
not be
chain,
good.
miners actively try to reorganize the network history to claim those high-fee transactions for themselves. A secondary threat is the fee gap inconvenience. When transaction volume is low, miners have no financial reason to burn electricity. They may intentionally halt block production, waiting for a sufficient pool of pending fees to accumulate before dedicating computational power to the network.
Yeah.
A heavy reliance on fees also centralizes power into the largest mining pools, which have the advanced infrastructure required to execute complex transaction reordering and maximum extractable value extraction strategies. The conclusion is strictly mechanical. If Layer 1 transaction fees remain suppressed by market forces, the foundational consensus architecture of Bitcoin will systematically fracture.
Yeah, it's not
Traditional finance investors often approach Bitcoin, assuming it behaves like an equity or a dividend-yielding asset.
good. It's not gold
However,
either.
simply holding Bitcoin on Layer 1 does not entitle the owner to any share of network transaction fees. This split-screen diagram highlights the architectural difference. On the left, proof-of-stake networks like Ethereum feature built-in protocol-level mechanisms that automatically route fee streams directly to staker wallets.
Right.
On the right, Bitcoin's structure strictly funnels 100% of Layer 1 fees directly to the single hardware node that successfully mined the block. Under Bitcoin's unspent transaction output, or UTXO model, coins are static script entries. There is no native smart contract layer and absolutely no staking capability built into the base protocol. Because Layer 1 fees bypass passive holders entirely and spot prices remain stagnant, capital allocators seeking a return on their investment are forced to engineer complex, non-native workarounds to generate cash flow. The most significant technical development of 2026 is the rise of trustless, non-custodial staking.
Yeah, I hope that we get covenants. I think it's BIP 360. I think that's the Bitcoin improvement proposal is number 360. And what I'm looking for is covenants so that you can essentially like engineer smart contracts on the Bitcoin layer 1. Because all of those, we're going to learn here a little bit about Babylon, and you could just think all the side chains, all the Bitcoin side chains, and then the Bitcoin so-called Bitcoin restaking solutions here. It's like, man, they're just they're not going to drive the transaction volume on the Bitcoin layer 1 that it needs to survive. Like you got to start thinking about this in terms of like the survival of Bitcoin or not, really, because
and that's the thing that I try to be balanced about, because I understand that Bitcoin does have a place, obviously, in institutional mind share and retail mind share, the decentralized aspect of it. There's a lot of things that give it legs. However, just like with all projects, ape that's crying about keto, we are going to point out the good and the bad, and there is an aspect to Bitcoin that is concerning.
yeah,
There is a serious lack of any kind of fees that are generated, because really, I mean, the fee, if you want to call them fees that are generated by the network, that's the newly minted Bitcoin. And as long
those
as
are the block rewards, but the volume is what generates the fees for miners, and it
and
ain't there.
and holding the token gives you no
No
exposure
yield,
to that.
no yield. And so that's
Yeah.
what this is trying to talk about. It wants to talk about how you generate yield with Bitcoin. But the problem with the source material here is that it's looking at stuff that's from like a year ago, when these restaking protocols, where you could actually like earn, almost 2% on Bitcoin. That's no longer true. You're going to be lucky to get 20 basis points. That's 0.2%.
Really, the only thesis for buying Bitcoin is that you feel that the price is that more people are going to buy it, that there's going to be buy pressure at some point, and that's going to drive the price to go up. That's really the only thing. And again, this isn't to make a bearish case for Bitcoin. This is just the harsh reality that the only thing that drives the price of Bitcoin is people perceiving it as being valuable, and more people buying it than anybody selling it. That's what moves the price.
And
That's it.
that's not the best model. You know what I mean? Like that's not the best model out there. But here's the thing though. If in the future, like if you want to say that there's value in speculation, which I don't really, I mean, you got to believe in something, I guess. But if at some point in the future, there are smart contracts on the Bitcoin layer 1, then all of a sudden you can have DeFi denominated in Satoshis, completely trustless, permissionless, sovereign DeFi denominated in sats. That's my dream. That's my dream right there. So
This cryptographic breakthrough allows static assets to generate yield natively, without exposing holders to centralized cross-chain bridges or smart contract exploits. Pioneers like the Babylon protocol start by using Bitcoin's native scripting capabilities. Holders lock their assets directly on Layer 1, utilizing localized time locks and specialized taproot addresses to define strict staking durations.
right. So the way that it's actually done, man, you have got to trust those protocols. Think Babylon or Solve or Stacks. You really got to trust those protocols.
Securing external proof-of-stake networks requires accountability. If a validator misbehaves, their staked backing must be penalized. The architectural hurdle is that the Bitcoin base layer cannot natively read external network data to execute a slashing penalty. This technical flowchart details the solution, the BitVM3 framework. BitVM3 moves the heavy computational evaluation off-chain. By using garbled circuits and succinct non-interactive arguments of knowledge, a challenger evaluates a misbehavior claim completely externally, mathematically outputting a single cryptographic secret key. That secret key is then fed back to the main chain. It provides the specific pre-image that satisfies the spend condition, triggering the transaction that mechanically slashes the malicious staker's Bitcoin directly on Layer 1. The capital efficiency of this model is compounding. Through integrations with lending markets like Aave v4, users can take their locked Layer 1 assets and simultaneously use their staking position as collateral to borrow stablecoins. By leveraging BitVM3, allocators turn a static UTXO into highly productive, leveraged capital.
Okay, so this is nice. You can absolutely take spot Bitcoin, stake it using, stake, quote unquote, using these protocols, Babylon, Solve. I think there's a couple of others. And then once you receive a derivative. Okay. So you receive this Bitcoin restaking token, solve BTC or BTC.B. I think that's the Babylon token. And then once you've got that token, yeah, there's no yield there. Like, not really. But what you can do with it now is you can borrow against it, because Bitcoin doesn't have any DeFi native on the layer one. So if you got spot Bitcoin on the layer one, you're kind of stuck. Now, we did, Mike, a couple of weeks ago, we took a look at ICP. And even though ICP is a bag of shit, there was that one protocol on there that was actually pretty interesting, because it would allow you to use an ICP canister to permissionlessly borrow against your spot Bitcoin. So that's kind of cool too. But it does, these protocols do make Bitcoin more useful, simply because now you can borrow something against it. But, it still doesn't solve the miner business model problem. It makes Bitcoin more productive capital, but it doesn't solve the problem for miners.
Generating yields between 4 and 8% while maintaining absolute crypto.
So the yields are not between 4 and 8%. The yields were maybe with leverage as high as 8%, like 9 or 12 months ago. Like not even 9 months ago. Like at the end of the bull, the yields weren't this high. So I think this must be working on source material that's like from a year ago, year and a half ago.
Graphic security on the base layer. While Babylon offers passive staking yields, extracting cash flow directly from network velocity requires the active capital management of a Lightning Network Layer 2 routing node. This diagram represents the mechanics of a routing node. Operators earn yield by forwarding hash time-locked contracts across their payment channels. Every time liquidity is routed, it is sheared by a dual fee structure, a flat base fee per transaction, and a proportional parts per million rate based on the total volume. Generating meaningful yield depends entirely on active channel balancing.
Right, and so on the Lightning Network, and there's a lot of free education at the Node.pro in the Learning Center, where you can learn about Bitcoin and Lightning and Nostr. I actually built a private custodial wallet on Lightning. So that was one of the projects, one of my little side projects or whatever. But so I had to learn everything about Lightning. And it turns out Lightning is super centralized. There's like only a handful of nodes where every other node has to connect to them, because you need inbound and outbound liquidity to be able to transact on Lightning. It's actually quite a bit more complicated than you might think. And there is a barrier to entry if you want to be a self-custodial, sovereign Bitcoin node operator and you want to run a Lightning node. There's a lot of work that goes into doing that. And so what it means at the end of the day is liquidity flows to these big Lightning nodes. There's like 10 that control like 90% of the network. And they're operated by, big companies like Block and what's the other one? Cash App.
Passive operators who simply open channels and let them sit typically earn annual returns of just 1 to 2%.
No, they don't. They earn zero. They earn bupkis. You don't earn anything to be a node operator if you don't have a ton of velocity. You need transaction volume, but more important than that, you need velocity.
Table data from 2026 confirms that routing is dominated by enterprise operators.
Yeah.
Large institutions like Block and Cash App route captive user withdrawal flows directly through their own nodes, achieving annual returns approaching 9.7% on their committed liquidity.
No, they don't. They don't get 9.7% by running nodes on Lightning. There's no way.
Operational vectors like on-chain fee bumping and unilateral channel force closures position routing as an industrial capital allocation task. The defining tension of 2020.
So it's also very dangerous to be a node operator, because you had better be very, very good with your security best practices. Otherwise, because there's constantly going to be, threats. There are attack vectors. There are people that are, their whole job in life is to try to steal your Bitcoin off of your node. And there are all sorts of different ways to do that by like taking down your hardware. You don't have to attack the cryptography. You can attack the actual way that the system works. So being a Lightning node operator is dangerous, man. And you've really got to know what you're doing.
26 is mathematically clear. The protocol's Layer 1 security budget demands excessively high transaction fees to survive, yet the macroeconomic fiat environment outright rejects paying them. To bridge this gap, The rigid, static base layer is now completely enveloped by a dynamic, yielding network of off-chain routing protocols and non-custodial vaults.
Right, but Mike, you know how we were learning about blobs when it came to ETH and how the layer twos are actually virtuous for the layer one? That the layer twos burn ETH and get it to deflationary? Well, I would submit to you that the exact opposite is happening here for Bitcoin, because all of these transactions occur off the layer one. They occur off chain, so to speak, for Bitcoin. So you've got the Bitcoin layer one network where there's basically no transaction volume. And then if you want to use Bitcoin in DeFi and you stake it, all of those transactions, they don't settle on the Bitcoin layer one. If you're going to use the Lightning Network, those transactions, those are tiny messages that go back and forth on Lightning. Those are off-chain, not on the layer one. So the only way that you get that is like through a submarine swap or something. So like there's not a driver of transaction volume here.
When the 20 millionth coin was minted, it permanently ended Bitcoin's era as a purely passive treasury asset. To survive its own hard-coded scarcity and the crushing pressures of global liquidity, the ecosystem has established Bitcoin as a productive financial layer, anchoring long-term systemic security in off-chain engineering.
Yeah, man, but it's got some serious problems, though. I think at the end of the day, though, like, I want to choose to believe. Like, I want to believe. I really do. I really want to believe. And when I take a look at the performance of Bitcoin, it has been performant. I'll put it that way. So, but if you take a look at the performance of Bitcoin, you know, in S&P 500 terms over the last 5 years, this is kind of an interesting chart. So here's BTC in S&P terms. And if we go back 6 years, Bitcoin in S&P terms has moved sideways. Like you've made nothing if you've held Bitcoin in S&P terms. So that's a lot of opportunity cost. You know, that's not good. Now, have you made money in dollars? Yes. But did you outperform the lower volatility asset in the S&P? I don't know that you really did. So this chart needs to go straight up. We need to have an actual Bitcoin bull where we get a parabola like what we got 2 bull markets ago. But it seems as though that may be less likely in the absence of like massive money printing, because Bitcoin's volatility has compressed so much as a result of those Bitcoin ETF products. So, I mean, at the end of the day, you got to make your bed, right? I choose to believe, man. I believe in BTC.
Yeah, and again, these deep dives aren't meant, to make you bullish or bearish on any projects. It's really just to give you a deeper understanding of the underlying mechanics or tokenomics, or how value capture works or doesn't. That is what all these deep dives are for. They're not meant to necessarily influence you to invest any one way. It's just that if you choose to invest or not invest, you do it understanding at a deeper level what it is that you are investing or not investing in. That's all these deep dives are meant for. They're not meant to, we don't influence anyone here. We educate. And again, dill hole included, I've asked repeatedly for like 2-3 days now, point out what we got wrong in the Kita deep dive and cite your source showing that we were wrong, and we are more than happy to change the deep dive. But as you can see in the chat, he just keeps rambling on, with ad hominem attacks and not giving a single example or citing a single source on what we got wrong. Not going to
because
budge.
we're not wrong.
Yeah,
that's why.
Not going to budge.
You can. Yeah. It's all
Anyway,
good. It's all good. Yeah, honestly, Mike, I just enjoy doing this and hosting this show with you because we get to learn something new every day. And I'm trying to figure out for myself, what do I buy? I want to make some money out of this. And so, like, over the next 90
there's
days, I want to get my
there's
shopping list in order.
the projects that I'm really focusing on is getting smaller and smaller. Um, the more deep dives we do, and the more that I understand, long term. Again, not to say that you can't make money, even something that we're bearish on, here. Not to say that you can't make money. People have made plenty of money on speculative pumps or buying the rumor, selling the news. There's short term. There's plenty of ways to make money longing and shorting projects. We're not saying you can't make money. What we're saying is, with how for how I'm choosing to invest, I'm looking for long term plays that are going to be the future financial rails for institutions and banks and governments and things like that, because I want to get in early. And a part of that is also value capture. I want to ensure that the token that I am buying has a connection to the fees and revenue that are being generated by the project. Because otherwise, why the hell am I investing in it? And I want to point out, it looks like Kita just announced that they're supporting X402, the base network that allows AI agents to navigate paywalls and things like that. That's bullish. But again, that is bullish for Kita, the network, the token as it stands now.
Yeah, they're separate things.
Well, exactly. That is what we're teaching here. Is you can be bullish on a project like Kita. I see that there's a lot of potential for Kita if they're able to pull off what it is that they're trying to do, and they're able to bring some of these partnerships to full fruition, to where TVL and liquidity is put on the chain. They are not there yet, and the token, it is a cheap gas token and it is a governance token. Yes, and I'm going to play it really quick. Let me see if I can find it. Yes, okay. Let me go to bookmarks because I bookmarked it so I could find it. Here, I am going to play this because this is Ty, the CEO of Kita. His own words. This is the CEO of Kita. His words, not mine. Listen carefully, and we'll dissect it.
You hold as a direct reflection on your voting power on the network. Number two, KTA is used for transaction fees. If you pay using transaction fees in KTA, it'll be a little bit cheaper.
All right. So far, he's saying it's a governance token. It allows you to vote. Zero value capture. He's saying that it's used to pay transaction fees. A very cheap gas token. That's not value capture. Now he's going to,
but also not on the private subnets. So like all the corporate, like institutional shit that people have been talking about that doesn't actually exist right now, like all that stuff, those are on private subnets, and you pay in fiat, and there's no KTA needed.
Cited source for that?
It's in the deep dive.
I want to make sure that we check that, because the guy I was talking to last night, the guy that was being logical and reasonable, not this ass clown. We went into a separate chat, and he was saying and was making some points that that was not the case. So I really want to go and find official documentation that says that before we put that out. But now he's going to get into what Ty is trying or thinking about adding to the token and its tokenomics and its utility. Not yet. We report on the current state here. We don't go off of what may be thinking about doing. But I want to make sure we paint the whole picture.
We do have support for payment through stablecoins and other fiat currencies, but that's more.
And that's what David was just talking about, that you don't have to use Kita to pay fees on the network. There is a small discount for using Kita but you can use stable coins and some other tokens. We are about facts here.
Or as kind of a convenience factor. And then the third thing for KTA is all of the anchor connectivity. We have not exactly rolled this out yet, but we are finalizing the plan for KTA involvement on anchors. And generally speaking, what it will look like is anchors will pay some sort of KTA fee based on volume on the network, and they will also hold a certain amount of KTA in like a reserve or a bond style instrument within the network, and that kind of serves as consumer protection. The KTA, yeah.
So, thank you. So that is potentially coming. And if that does become part of the tokenomics, we will change our assessment. But as it sits right now, all KTA is a governance token and a cheap fucking gas token. Deal with it.
Yeah, it's a do nothing. And are there actually any businesses that use it for anything? Or is it just kind of like one of these, right, not yet, exactly. It's like, don't worry, in the future, maybe, kind of, hey, look, we got a partnership with the royal family. Look over there. None of it's real.
Well,
there's no there there.
Right now, testnet is what they're really working with because, and we showed it on the show the other day. The mainnet is not fully live because there's really nothing to put on it. Everyone is in development. It's still early on. It's still an early project. I get it, but they have yet to prove, and there's a lot of controversy around their testnet where they did their stress test. So let's see. Where is it at?
You see, Mike, I kind of disagree with you on that point because I think that, if they're going to launch a coin, launch a protocol, like you better have someone using it for something. Otherwise it's just another one of these vaporware projects. If you're just relying on like saying, oh, in the future, maybe we'll have this on here. That doesn't cut it anymore. That may have been allowed to fly in the past, but no longer. Mike, what are you pulling up here? Uh-oh. I think either I froze or Mike froze. Can't tell. Can't tell which one. Nope. Mike froze? Okay, got it. So it's just me, huh? I thought that I was the one who froze. All right, so I'm just going to move myself back here. Well, thanks you guys, everyone for joining live. I really do appreciate all of you. It's always a pleasure to be able to do this stuff, and talk through all these different projects every day and really learn with you guys. That's really, what I'm sure, Mike and I are focused mostly on is learning and building our own skill sets. So Mike, you back?
Yeah, I had to reboot a little bit. So, so basically just what I was getting at is we report on the current state of these projects. Can that change? Absolutely. And we will update, as that happens. But it's important to understand that, we are not going to, we're not going to lean into possibilities because if you choose to do that, that's on you. But we are going to report on the current state of these projects because you can't count on gossip and rumor. And if you invest on that, you need to understand those risks. So anyway, that's kind of our 2 cents on that. As far as KETA, kind of what I was getting at is, there's a lot of controversy about, how realistic that stress test was, because there's a lot of factors. I mean, it was in a controlled environment. it wasn't dealing with, having to deal with, people trying to.
So, Mike, is that the whole reason why people were bullish on this thing in the first place? It was because it boasted some crazy, ridiculous high transactions per second number, and Eric Schmidt gave them $20 million. Those are the two reasons, right? Basically,
those are the two big reasons, yeah.
In a nutshell. Okay, so number one, the transaction per second turns out that's fake, or at least like nowhere close to what they said. And then, the second thing, Eric Schmidt, like, dude, $20 million for him is nothing. So, like, they're basically trying to borrow the clout of his name to push a protocol where there's no there. And then the token, just dump. All it's done is dump because the team has been dumping it. It's like, dude, this is clearly they just dump on people.
Well, I want to actually come up with some data to support that. I want to make sure that anything that we put out is backed. But I do those are the things I want to work on today, is figure out a way to where we can identify those those rumors about the whale wallets that potentially could be the team, and them front running the bullish news. Basically moving tokens to centralized exchanges and potentially.
Yeah. I'd heard that too. I don't know if it's true or not.
But I want to verify it. I don't want to be a little bitch like, old boy in the chat and just make wild accusations without doing our due diligence and actually, presenting the evidence.
We could probably find the receipts. I would go to Arkham. That's where I would go first. I bet you that Arkham has doxed their wallets.
All right. Well, we're over time. Let's go ahead and bail. Join us tonight, or actually join us for Blockchain Report going on now. David's Market Wrap at 1 p.m. Pacific, 4 p.m. Eastern. And tonight, do not miss the Red Pill. We're going to be talking about the Constitution and the First Amendment rights of all Americans to say whatever the fuck they want.
What's the First Amendment again, Mike? I forgot. What is that?
Hey, it's a thing on the piece of paper.
With the guy. Don't worry about it.
They wrote it with the feather and the pin,
Yeah, exactly.
All right. But join us tonight for the Red Pill. It should be a good one. But till then, Veteran Crypto out.
Peace.